Get ready for the biggest space and tech story of the year. We start with the massive competition brewing between SpaceX and Rocket Lab. We're diving deep into which company, SpaceX or Rocket Lab, is the superior aerospace investment right now. We'll look at the launch history of Rocket Lab's Electron rocket and the growth of their non-rocket technology, and compare that against the sheer dominance of SpaceX, focusing on Elon Musk's company and its incredible Starlink network and future plans for Starship. Find out if you should be buying the rocket innovator or the undisputed leader in space travel. Percent of contracting dollars going to SpaceX from fiscal 2023 through 2025. We also explore how Starlink and Starshield satellite sales are fueling this massive revenue stream for the company. And finally, the countdown is on for the SpaceX IPO. Industry rumors suggest the prospectus could be published as soon as May 20th, leading up to investor roadshows starting June 4th and a potential listing on NASDAQ on June 12th. We'll analyze the rumored fundraising goal of $75 to $80 billion and what this massive event means for the entire Wall Street technology sector. Don't miss out. Stay tuned right here for all the updates on this monumental launch. In the fiercely competitive aerospace sector, investors are weighing a choice between the established dominance of SpaceX and the rising potential of Rocket Lab. SpaceX continues to dominate headlines, fueled by Elon Musk's upcoming initial public offering, valued at approximately $1.75 trillion. SpaceX is positioned as the world's leading launch service provider, boasting a reusable Falcon 9 rocket with 635 completed missions, and leading the satellite internet market with Starlink, which serves over 10 million customers and is projected to reach 18 million by the end of 2026. The company's revenue last year reached around $18.5 billion, with immense optionality stemming from its Starship spacecraft, which aims to enable interplanetary travel and lunar Mars base establishment, alongside the potential growth from its XAI unit developing the Grok AI model. Conversely, Rocket Lab, trading at 5.95%, presents a compelling alternative for immediate investment. The company has seen its share price soar close to 80% year-to-date. Rocket Lab's core business revolves around rockets, with its Electron rocket achieving more launches than any other small rocket. Furthermore, the company's non-rocket technology, including spacecraft and satellite components, generated 68% of its first quarter 2026 revenue and has been utilized in over 1,700 commercial, defense, and national security missions. Rocket Lab reported a 63.5% year-over-year revenue jump in Q1, reaching $200.3 million, supported by a record backlog of $2.2 billion. Strategic moves, including the acquisition of Mynaric AG and the development of the Neutron rocket for the medium-lift market, signal continued innovation. Rocket Lab has also secured a partnership with defense giant RTX to support a major government program. The decision for investors hinges on their timeline and risk tolerance. For immediate investment opportunities, Rocket Lab is the recommended choice as its shares are currently available. However, for those seeking a long-term proposition, SpaceX is arguably the superior pick, given its established market dominance and transformative potential. Investors must recognize that both companies represent high-risk, high-reward ventures in the aerospace industry. SpaceX is preparing for what analysts suggest could be one of the largest initial public offerings in market history, targeting a valuation between $1.75 trillion and $2 trillion. This massive valuation is underpinned by aggressive revenue projections, with estimates suggesting the company could generate between $15 billion and $20 billion by the 2025-2026 timeframe. Achieving a $2 trillion valuation based on $20 billion in revenue implies an exceptionally high price-to-sales ratio, estimated to be between 100x and 125x. The company's trajectory is further amplified by the recent acquisition of Elon Musk's AI venture, xAI, for approximately $250 billion, effectively positioning SpaceX as a combined AI and space infrastructure platform. To justify this combined valuation, SpaceX must demonstrate sustained, exceptional growth. Adding a significant cryptocurrency dimension to the story is SpaceX's substantial Bitcoin treasury. On-chain data from Arkham Intelligence estimates the holdings at $637 million, though other figures place the value closer to $373 million, likely due to differences in tracking methodology. If SpaceX successfully lists at a $2 trillion valuation while retaining these holdings, it would instantly establish the company as one of the largest publicly traded corporate Bitcoin holders globally, joining peers like Tesla and MicroStrategy. The IPO structure is designed to manage market impact, with SpaceX expected to sell less than 5% of its equity, including up to 30% of that allocation designated for retail investors. The success of the valuation hinges on the long-term viability of Starlink's addressable market, which spans rural areas, maritime, aviation, and government contracts, while navigating intensifying competition from Amazon's Project Kuiper and complex international regulatory hurdles. The treatment of Bitcoin in the official IPO filing, whether it is classified as a strategic hold or a tradable position, will be a key indicator of the company's long-term treasury strategy. This dynamic mirrors past events, such as Tesla, where Bitcoin holdings became a central topic during earnings calls, sometimes overshadowing operational performance. The scale of the Bitcoin treasury will signal how seriously SpaceX integrates digital assets into its core business strategy. SpaceX is experiencing a significant boost in federal revenue, driven by strong sales of its Starlink and Starshield satellite services. This surge is positioning the company ahead of a major initial public offering scheduled for next month. SpaceX currently accounts for the largest share of federal revenue among Elon Musk's companies registered to do business with the government, with its procurement footprint representing nearly the entire $12.8 billion total since fiscal year 2023. The primary federal customers for SpaceX are the National Aeronautics and Space Administration, NASA, and the Department of Defense, DoD. SpaceX serves as a critical provider of essential space launch services to both agencies. Data indicates that nearly 43% of SpaceX's contracting dollars were awarded by the DoD between fiscal years 2023 and 2025. Looking ahead, the sales of Starlink and Starshield services to the federal government in fiscal 2026 have shown a sharp upward trend. This strong performance is fueling optimism as SpaceX prepares for its upcoming IPO. Industry speculation is intensifying around the initial public offering, or IPO, of Elon Musk's SpaceX. Rumors suggest that a prospectus may be published imminently, potentially as early as May 20th. Coinciding with the new, slightly delayed launch date for the Starship vehicle. While unconfirmed, sources indicate that SpaceX's financial team and advisors are preparing for investor roadshows scheduled to commence on June 4th. According to reports from Reuters, the anticipated timeline for the IPO process is structured as follows. The S1 prospectus is expected on May 20th, followed by the roadshow on June 4th, a share price setting on June 11th, and the actual IPO occurring on June 12th, with listing on the NASDAQ exchange on June 12th or 13th. The scale of the potential offering is immense. Rumors suggest SpaceX aims to raise between $75 billion and $80 billion from new investors. If realized, this valuation would place SpaceX well over $1 trillion, with some analysts estimating a valuation exceeding $1.75 trillion. This would mark the largest IPO in history, surpassing even Saudi Aramco's previous record of $29 billion. Significant institutional interest is also mounting, with investment giant BlackRock reportedly considering an investment ranging from $5 billion to $10 billion in SpaceX. Musk established Space Exploration Technologies Corp. In 2002, utilizing proceeds from his PayPal stake sale as initial seed capital. A successful IPO is poised to have significant ripple effects across the Wall Street technology sector as capital is reallocated towards SpaceX allocations, potentially boosting other space-related equities. Furthermore, Musk is expected to maintain substantial strategic control, retaining approximately 42% of SpaceX equity through a dual-class share structure that grants him around 78% of the voting power. Reports also suggest Musk could receive a substantial bonus of up to 250 million shares, valued as much as $1 trillion in stock options. Earlier in May, SpaceX confirmed a board-approved 5-for-1 stock split, reducing the share price from $526 to $105 per share, a move theorized to make the IPO more accessible to a wider investor base.